On 1st February 2026, the Union Budget 2026-27 set the course for India's economic priorities over the next year. Let's start with the positives. The government maintained fiscal discipline, targeting a fiscal deficit of around 4.3% of GDP, signaling stability for markets and investors. Public capital expenditure remains high, with a strong focus on infrastructure including highways, rail freight corridors, logistics parks, and urban development aimed at boosting growth and creating jobs. In agriculture and rural development, over 1.62 lakh rupees crore was earmarked for support including credit access, crop value chains, and rural livelihoods, reinforcing the backbone of the Indian economy. Manufacturing and tech sectors also got a push. The India Semiconductor Mission 2.0 saw an increased outlay of about 40,000 crore rupees aimed at strengthening domestic tech production and reducing import dependence. For taxpayers, while the income tax slabs remain unchanged, the budget simplified compliance, making return filing easier and extending deadlines for taxpayers without heavy penalties. The government also eased compliance for NRIs, expanding investment limits and smoothing property and tax procedures, boosting global participation in Indian markets. Now let's look at the concerns. Despite calls for relief, there was no major income tax cut for the middle class. Tax slabs and rates remained steady, which disappointed many salaried taxpayers facing rising costs. Though infrastructure and future industries get big allocations, short-term relief for households, especially in areas like health and consumer support, was limited. Social sectors like healthcare and education received modest increases, but critics say they didn't match the urgency of rising needs. Small businesses and MSMEs anticipated more direct financial support, but most measures were policy-oriented rather than cash-focused. Overall, Union Budget 2026-27 is forward-looking and growth-oriented. With a 4.3% fiscal deficit target, strong infrastructure spending, and support for tech and agriculture, it aims to strengthen India's future economy. But with no tax relief and limited immediate benefits for households, its success will depend on execution more than announcements.